Breaking news from the nation's capital. The federal government hits pause, and the ripple effect reaches all the way to South Dakota's front door. Shutdowns just don't slow government offices. They ripple through every corner of the housing market. So here you are, excited and ready to take this huge step of owning your home. You've done everything right. You found a home, you locked in your rate, maybe you even packed the first box. Then, out of nowhere, you hear the government shutting down. And suddenly your lender says your loan could be delayed. From FHA to USDA, from Rapid City to Sioux Falls, homebuyers and homeowners alike are asking the same question. What happens to my loan when the government shuts down? Let's cut through the noise, because this isn't about politics. It's about people and what it means for your home. And here's why this hits close to home. In South Dakota, roughly 1 out of every 3 new mortgage loans rely on government-backed programs like FHA, VA, or USDA. So when Washington slows down, it doesn't stay in Washington for long. Today, in this video, we're getting an understanding of what this means for those of you who currently own your home in South Dakota and those who are hoping to buy a home in the near future. I'll break down the departments and loan programs that are affected, what's still moving along with business as usual, and how you can keep your deal on track. I briefly touched on this a moment ago, but I'll restate it here again. There's a few major types of mortgage loans that rely directly on federal government programs. Whether you're still house hunting or you're under contract with a deadline, you'll definitely want to know how the shutdown impacts you moving forward. I'm going to start with FHA loans. The Federal Housing Administration, or FHA, is part of the U.S. Department of Housing and Urban Development. These loans are insured by the federal government. One might assume that these loans are currently unavailable, solely based on the fact that federal's in the name. However, I'm happy to report that FHA loans are still open and operating. But with the shutdown, there is noticeably fewer staff in these offices. Yes, they are still a possibility, but with fewer staff, you need to be sure to expect slower responses and potential closing delays. Next, we'll look at VA loans. If you're a veteran, please know that this loan type remains an option during this shutdown. However, much like the FHA, any inquiries from either your lender or yourself will likely see turnaround time stretching beyond their normal time frame. So it's a good idea to build in a buffer or certainly be proactive with any part of the process involving documentation or verifications needed from the VA offices. USDA loans. There's no avoiding it. Unfortunately, the homebuyers qualified for USDA loans are the ones that are feeling the impacts of this shutdown the most. These rural and small town programs are on pause for new approvals until the shutdown ends. So if your loan involves one of these programs, it may not stop, but it will likely move slower. Something that may not be known to the average home buyer is the process of verifying if a property is in a flood zone or not. This verification process is ran through a federal flood map service center called FEMA. The good news is that lenders are able to verify if a property is in a flood zone still. However, if your new home is in a flood zone, you can't close until you have an insurance policy in place. Because the National Flood Insurance Program, NAFP, isn't funded during a shutdown, no new flood insurance policies can be written or renewed until Congress acts. Thankfully, solutions are available. If you're in a pinch, a private insurance company can step in with a policy, or there is the possibility that you can assume the seller's existing flood insurance policy. Every mortgage, regardless of the program, requires lenders to verify income and taxes with the IRS. Now, normally, it's a quick check-in electronically, but during a shutdown, those requests will certainly pile up. I'd have to imagine there is likely a significant backlog already. So it may be worthwhile to do whatever you can to work around this requirement. meaning your lender may need to rely on the financial and tax documentation that you have access to provide. These would be items like pay stubs, W-2s, tax returns, or bank statements. While this might not be the biggest hurdle to overcome, there should be some expected time added to the processing of these verification measures before you get to that coveted clear to close. Much like the tax verification process, lenders double check your employment and social security number through federal systems. During a shutdown, those verifications can slow or pause entirely. If you can have your social security card available for verification, this may circumvent the out-of-service federal systems. Now, these types of verifications are extremely important. Even if you're fully approved, a missing verification could temporarily hold up your file. What about those of you who are working with conventional loans? Why haven't you heard anything yet? Well, this is where I'm getting to this group. Thankfully, conventional loans that are backed by Fannie Mae or Freddie Mac remain open for business. But like I just mentioned, if the lender is relying solely on IRS or Social Security checks, those steps can still cause small hiccups. To translate that, most loans can still close. Just expect minor delays when anything touches a federal system. Moving from the individual loan types to the individuals on the loan, the sad reality of right now is if you or your co-borrower work for the government, your lender may not be able to verify your employment or income until offices reopen. If this applies to you or anybody you know that works for the government, it is absolutely crucial that you hear this next part. This does not mean that your deal or your loan is done for. It's not a no, it's a not yet. It means that you'll need updated paperwork or different types of paperwork, and you may have to look at finishing the verifications later. Lastly, if you're wanting to know how this is affecting those in the real estate industry or the mortgage industry, I'm very fortunate to say that things around here are open and we're rolling with the punches in the best ways that we can. From loan processing departments to the customer service teams, we are continuing to provide our services uninterrupted. Obviously, getting the groups or people, the particular programs and resources that are impacted the most was at the top of the priority list for this video. I want to shift the focus toward being proactive with this information and go through some practical steps. So after absorbing all of this information, it's probably good practice to stop and do a self-check. If you're buying a home or already under contract, take 30 seconds and ask yourself, 1, is my loan backed by FHA, VA, or USDA? 2, is a property in a flood zone? And 3, will my lender need IRS or employment verifications? If you answered yes to any of these, call your lender today if you haven't already heard from them. The earlier you plan, the smoother your path will be, even in a slowdown. The important piece of all of this information is to know how to handle the adversity. Each person in each loan type are impacted to some varying degree. Once you know what to be looking out for, it's time to be proactive. Here's how each group can stay ahead of the curve. For buyers using FHA, VA, or USDA loans, ask your lender to adjust the timelines early. If USDA, your lender can prep your file now so it's ready the moment funding resumes. For buyers in flood zones, first, check if the seller has an assumable flood policy. If that isn't an option, ask about private flood insurance, which can be a solid option to bridge the gap for all borrowers. Continue to keep recent pay stubs and W-2s handy. Stay in regular touch with your loan officer. Every few days counts. For federal employees, request a verification letter from HR once the shutdown ends. Stress to them the importance of completing the verification for you. You can absolutely share your timeline, and if they don't have your lender's contact information already, it might not be a bad idea to provide them with a direct line. In the meantime, be sure to have the conversations with your lender and ask about temporary documentation solutions for agents, partners, and originators. It's upon our shoulders to set expectations early with buyers, sellers, and each other. Build flexibility into closing timelines. And at the end of the day, transparency earns trust. A government shutdown can feel like someone hit pause right when you're ready to move forward. And that's frustrating. And really, there's a lot of people around the country that are impacted. And without a better way to put it, it's sad. But remember, this isn't a collapse, it's a delay. For most loans, the system doesn't stop, it just slows. With clear communication, a little patience, and the right guidance, you can still reach the closing table. A final message to the first-time buyers, the real estate pros, and the federal employees just trying to get home. You're not powerless. You've got tools, options, and most importantly, there are people out there that are ready to help. Hey, if this breakdown helped clear the fog a little bit, hit that subscribe button and stick around for more South Dakota focused mortgage updates so you can make confident decisions even when things around you feel a little uncertain.